episode of Zach Pasquarello, going live every day, Monday through Friday, 11 a.m. Eastern Standard Time. In this video, I'm going to talk about my net worth. I started a bookkeeping business 5 years ago. I started private money lending 2.5 years ago. I used to be a warehouse manager. I used to be an Army infantry officer. Before that, I went to Lehigh University, and I'm 31 years old, and I doubled my net worth from July 2024 to July 2025. And I'm going to talk about it. No gimmicks, no nonsense, no BS, if you will. So let me just be straight up honest with you. The best way to double your net worth whenever you're young is to earn a lot of money. There's two different types of income. There's active income and there's passive income. And I'm not going to lie to you. You need active income first. So unfortunately, in this video, I'm not going to have, let me just make sure my microphone is working. Let me see, is my microphone plugged in? Is my microphone working? Testing my microphone. Darn it, I don't know if my microphone is working. Stand by, let me make sure that we are on the right microphone. Doesn't seem to be working. That's okay. Hate to do this. Hate to mess up the live like this. Not sure that the microphone's working. My computer audio might be working. I know this is killing things right now. My computer microphone might be working, but my good microphone I don't think is working. I can't seem to get it to work either. Sorry about that. Hopefully the audio is not terrible. Oh, that makes me upset. That makes me frustrated. But hopefully you can still hear me. Sorry about that. Okay, let's get back to it. Let's stay focused. So how I doubled my net worth, 31 years old. Yes, I've got 4 kids, 1 on the way, due in September. So active income versus passive income. That's really what it's all about. In the beginning, you need active income. Don't ever let anybody tell you that you can just start investing right away. You need to have active income. You need to have cash flow. You need to have a golden goose in order to start to get to passive income. That's what you need. Active income first and then passive income. And I'm still frustrated about this microphone. Now I'm not even sure if anything's working. If you can hear me, let me know. If you can't hear me, also please let me know. Okay, so I'm going to share my screen here in a second. I'm just going to go through all my accounts. So there's 2 big takeaways here. Active income versus passive income. In order for me to double my net worth, honestly, the majority of it came from active income over the past 12 months. My bookkeeping business has been amazing. My bookkeeping business has cash flowed really well. Monday, I talked about, what did I talk about? Monday, I forget what I talked about. Maybe I talked about my investment strategy. Tuesday, yesterday, I talked about budgeting and living below your means and living frugally and not spending more money than you make. That's what has enabled me to save money, take risk, invest more money, and earn more money, take my active income, turn it into passive income. So I doubled my net worth by just making a ton of money these past 12 months through my bookkeeping business. And now I'm probably going to double. It's going to take long. I'm not going to double my net worth every single year. I guess we'll just see what happens. I'm not even going to pretend to try to predict the future. Okay, let's stop wasting time. Let's just jump right into it. Let me share my screen. Hopefully you can see it this time. No, I had some technical issues. Okay. All right. So let's talk about it here. We have, and I blacked out some things just so that I didn't give out any personal information. Okay, so here is my net worth. So there's 2 big takeaways here. 2 big takeaways. First takeaway, track your net worth. Have a system. Track your net worth. You can use software. For me, I just use Microsoft Excel. It's a really basic spreadsheet. I'm just using Microsoft Excel. Nothing fancy, nothing crazy. Yeah, just use Microsoft Excel. and I do it every single month. So this is July 2024, and I just simply log into my accounts. It takes 20 minutes, and I log into my account. So my profit and loss is important, but this is my balance sheet. This is my personal balance sheet. This is everything included. This is cash, retirement accounts, real estate, credit cards, loans, lines of credit, business. This is everything in one. This is your PFS, your personal financial statement. So up at the top here, we have, this is my personal bank account, July 2024, $4,000. This is my business bank account, Harrisburg Bookkeeping, $10,000. This is my online savings account. I used to use Marcus by Goldman Sachs. They offer 4% annual interest, high yield online savings account, $163,000 in my Marcus savings account. This is my Vanguard account, $118,000, my retirement account. So I've got my IRA, I've got a 401k. I think that's it. Vanguard, $118,000. This is my wife's Vanguard account. This has her IRA. This has her 401k with her job. Keep in mind, I'm 31. So our retirement accounts aren't great, but we're still relatively young. So hopefully these continue to grow, obviously. Both of our retirement accounts are pretty much invested in mutual funds that track the S&P 500. So there we have our two Vanguard accounts. And then I have Fidelity. So my old work, when I used to work at Chewy, my 401k was through Fidelity. So I just never rolled it over into Vanguard. Probably could, probably should, but I've just kept it in Fidelity. And then my wife also has an IRA in Fidelity. So it's just kind of all spread out. When I was at the Army, I had a thrift savings plan. This was just like our 401k, $27,000. And then when I worked at Eurofins as a staff accountant, I started working at Eurofins as a staff accountant halfway through running my bookkeeping business. And so I put 100% of my salary into my 401k, or as much of it as I possibly could. So in 6 months, I just put all my money into my 401k, and it's worth $20,000. And then last year, July 2024, I had $220,000 out on the streets, private money loans. And then these are my houses. So I have my address right here blacked out so that you guys don't see my personal address. But this right here is my first house that I bought in 2019. It's worth $309,000. This is the current house that I live in right now, worth $631,000 as of July 2024. I use Zillow estimate. I know it's not perfect, but what am I going to do? An appraisal every single month? That's not realistic. So I just go to Zillow every single month, and I just simply track my personal real estate just to see how it's doing. Okay. Now let's see what else. What else do we have here? So those are all my assets. So let's just do a real quick check. We'll check at the end here. Liabilities. Okay. So these three, nothing. Credit card with Wells Fargo. So my liabilities are negative. So negative $8,000. Wells Fargo credit card. American Express credit card, negative $4,000. So this Wells Fargo credit card, I got January of 2024, 18 months, 0% interest. We used this Wells Fargo credit card to buy a lot of our new furniture when we moved into our new house. So that has a 0% interest for 18 months. And this American Express, this is what I use for everything. I pay this off every month. What else do we have? This is my personal mortgage, $577,000. And this is my rental property, my old house. That's my mortgage, $183,000. And then my SBA loan, $144,000. Okay, so my net worth, July 2024, was basically $700,000. Cash, $240,000. And when I say cash, I specifically am talking about my literal cash in the bank account, plus my savings account, plus my private money loans, minus my credit cards and my SBA loan. So this is my cash, or maybe more appropriately, I would call it current assets. This is my current assets. Cash plus notes receivable, private money loans, minus liabilities and credit cards, $240,000. Retirement account, $272,000. This is just all of my Vanguard, Fidelity, TSP, Conrad, Siegel, just everything added up, and $272,000. And then my property equity, this is the current value of my houses minus the mortgage, $180,000. And then, so I'm also tracking the increase. So I track my net worth every month, and then I compare this month to last month. So my net worth increased by $35,000 from July to June. My cash increased $18,000. My retirement increased $16,000. My real estate equity increased $1,000. So for a grand total, July 2024, $694,000. Let's call it $700,000. That was my net worth back in July. All of my assets minus all of my liabilities. Really simple. I keep it pretty simple, in my opinion. Credit cards, 401k, IRA, private money loans. That was July 2024. Now, let's look at July 2025. Let's just black this out real quick so that you guys can stay focused. Okay, July 2025. Cash, I don't really keep a lot of cash. $10,000 in my personal bank account, $46,000 in my bookkeeping bank account, $348,000 in my Zip Capital bank account. And now I'm not going to go through individually, but all of my retirement accounts, they're the same right here, but $400,000 across all of my retirement accounts, 401k, solo 401k, IRA, everything there. Now, private money loans still in Harrisburg bookkeeping, because I started Zip Capital in January. So I still have some real estate private money loans in Harrisburg bookkeeping. That's $662,000. And then as those loans get paid off, I'm moving all my money into Zip Capital. So I have $927,000 of real estate loans in Zip Capital. These are loans receivable, notes receivable, current assets. So total, I have $1,589,000 of loans receivable, notes receivable, current assets, private money loans on real estate, money that's owed to me, earning 12% annual interest. Asset, personal house, $653,000, rental property, $319,000. Zip Capital investor payable. That's that number right back there on the wall, $359,000. I owe people $359,000. People invested $359,000 into my fund, and I'm paying them 8 or 9% interest. I have a home equity line of credit on my rental property. I've got 2 of them, total of $89,000. I'm paying the bank interest on my lines of credit. I've got 4 credit cards. So these 2 right here, Chase and American Express, these are 0% interest for 12 months. So that's why the balance is so high. I just did some credit card hacking, and I'm gonna have to pay these off over the next 12 months. So these are my credit cards that I currently have. I have an American Express business line of credit outstanding, $70,000. American Express personal line of credit, $28,000. For these 2 lines of credit, I'm paying 8 or 9% interest, but I'm happy to do that because I'm making 12% interest on my real estate loans. This is a $25,000 personal loan that somebody else lent to Harrisburg bookkeeping. And then here's a $300,000 business loan. Another business lent $300,000 to Harrisburg bookkeeping, just a promissory note between their business and my business, earning 9%, $300,000. Here's a Wells Fargo business line of credit, $20,000. Here is my real estate mortgage for my personal house, real estate mortgage for my rental property, and my SBA loan. So we have cash or current assets, cash plus private money loans minus all those lines of credit and credit cards and SBA loan, everything added together $900,000. So if I were to close out all my private money loans and pay off all of my credit cards, all of my loans, I would essentially have $900,000 of cash sitting in my bank account. Cash increase from last month, $45,000. My retirement account, $400,000. And this is all IRA, 401k stuff I can't touch until I'm 60 years old. My retirement accounts increased last month by $30,000. If you've been following the market, last month was pretty strong for the stock market. Property equity, $222,000. I have 30-year mortgages on both my properties. I just pay off my mortgages every month like everybody else. My property equity increase over the past month has been $8,000. So a total increase in my net worth from July to June, 30 days, 1 month, $85,000 net worth increase. And about half of that is due to my cash flowing business. The other half of that is due to my 401k, IRA, and properties all appreciating in value. So there we have it, $1,538,000 net worth, 31 years old, July 2025. My net worth doubled from 2024 to 2025. So 2 big takeaways here. And then if you have any questions or comments, let me know in the chat. I'll do my best to answer everybody's comments and questions. 2 big takeaways. First, active income. You need a cash flow. You need a golden goose, a cash cow. You need active income. Second, you need to track your net worth. Track it. Even if it's decreasing, it's still good to track it. You can't, what's the saying? You can't grow what you don't know. You can't grow what you don't track. You can't optimize what you're not measuring. So you need data. So here's my data. I'm just simply inputting numbers into a spreadsheet. I'm tracking everything so that I can see in real time how much things grow. So here, if we unhide everything, you can see here, I track this stuff on a monthly basis. April 2024, my net worth was $578,000. And then April, May, June, July, August 2024, January, February, March, April, May, June, July 2025. I'm tracking my net worth every single month. It takes 20 minutes, but this data is so valuable. I'm tracking my increase. So on average, this is so cool. On average, my net worth has increased every month for the past 18 months by $64,000. And that's primarily due to my active income. Probably about half. Let's see, my cash increase on average, $48,000 per month. My retirement increase on average, $11,000. So as I get older, as I get more assets, as I get more value in my loans and my retirement accounts, hopefully my investments and my passive income will start to increase more on a monthly basis than my active income, than my cash. That's the idea. Retirement accounts increase exponentially more because of compounded interest. For now, that's not the case because I'm still young. I'm still relying on my active income to increase. But the moral of the story, cash flow, active income, successful business, anybody can do this. I'm not any different than you. I did not grow up with rich parents. I didn't grow up with parents who had a hedge fund, or I didn't grow up with investment banker parents in New York City. I didn't grow up with parents who were actors in Los Angeles. Like, no famous family members, no rich family members, just good, honest, hard work. Went to a regular school, was an infantry officer in the military, was a warehouse manager, and then just started my business and grew my bookkeeping business to the point where now I'm making $40,000 of monthly recurring revenue, and I'm just living frugally below my means and just dumping everything into my private money loans. Okay, let's get back to it, and let's see if anybody has any questions or comments. Johnny, any updates on LinkedIn Sales Navigator? Are you still loving it? Yes. So I'm connecting with 20 people every day. I'm sending 20 new LinkedIn connections every day. And then I'm just messaging as many people as I possibly can. Right now, I have about 4,000 LinkedIn connections. I've probably sent close to 1,000 messages. I'm just going to message every single one of my LinkedIn connections until I message everybody. So yes, if you're looking to grow a business, definitely recommend LinkedIn Sales Navigator. Is amazing. 31 years old and almost 5 kids. You're getting to work. Johnny, I like having kids. I like having a big family. I love my family. I'm pretty excited about it. How do you account for transferring profit from Harrisburg Bookkeeping to Zip Capital? Steele, it's just owner's equity. I own 100% of both companies. So transferring money from Harrisburg Bookkeeping to Zach Pasquarello is an owner's distribution, owner's equity, same concept. Transferring money from Harrisburg Bookkeeping to Zip Capital, owner's equity, owner's distribution, owner's draw, owner's contribution, owner's pay, owner investment, whatever you want to call it. It's an equity transfer, just moving money from one pass-through entity to another pass-through entity. What's your goal with tracking this? Is it for personal reference, or do you use it to help making business financial decisions? It's just for personal reference at this point. It's just interesting to see how my money grows, or maybe how it doesn't grow sometimes. Like, for example, there was a month, my retirement account in March of 2025 and April 2025, I lost $13,000 in March and $35,000 in April in my retirement account. So it's not always an increase. So it's just good for personal reference. This is a good way for me to track, because as things get more complicated, I have more assets. So before, I could just simply track my bank account and my retirement account. I could see, is it growing? How's it doing? But as things get more complicated, I've had to track my assets more efficiently, because I have assets coming in multiple different places. I need to make sure that my assets are increasing in accordance with my liability. So I need to make sure everything is working together. So I want to add up all my assets and subtract all my liabilities, and just make sure that I'm always accounting for everything and make sure that I'm on track. So I look at these numbers, I see as long as it's going up, as long as it's increasing every month, I know things are going well. I'm doing well. I'm doing the right thing. If for example, maybe I was over leveraged and maybe I had too many loans and not enough cash, I would be able to see that by looking at my personal financial statement, my balance sheet. I would be able to tell if I was over leveraged and didn't have enough, because I always want to make sure I have enough cash to pay off my loans. That would be a really bad situation for me to be in if I didn't have enough cash to pay off all of my liabilities. So I just want to keep tabs, especially as things grow, as I'm taking on loans from other businesses, other investors, lines of credit, home equity line of credit, credit cards, as multiple bank accounts, multiple businesses. I just want to track everything in one place. So that's why I'm doing that. Okay, I think that's pretty much it for today. That's my net worth. That's how I doubled my net worth in 12 months. So my goal is to raise $5 million in Zip Capital. That's my goal in 2025. And my 5-year goal is to raise $50 million in Zip Capital. So if you want to earn passive income, if you are an accredited investor, which accredited investor means that you have $200,000 of annual income or a $1 million net worth. If you fit either of those criteria and you have $25,000 you want to invest into my investment fund, I'll pay you 8%, potentially up to 12% fixed returns, depending on how much you invest. You have to be in the United States. So click the link in the description, Zip Capital, register on my website. I'd love to chat with you to see if we can't work together. Tomorrow, I don't know what I'm going to talk about. It'll be, stay tuned. I'm going live every day. 11 a.m. Eastern Standard Time. I appreciate all of you watching. Let me know in the comments. Let me know in the chat what you want me to talk about tomorrow. If you have any questions, if you have any comments, with the $350K investment liability, could you include the 8 to 12% they could earn in that overall number? With the 300, could you include the 8 to 12%? So, Steele, that's a good question. So 3 out of this gets kind of complicated. So I've got 5 investors. 3 of them are currently reinvesting their distributions. So that number on the screen and behind me, that number includes their accrued interest. So every month, let's just say somebody's making $1,000 interest, 100,000. So I'm adding that back in. So yes, so that is counted in that number. So one of two things are happening. Either their distributions, and that gets included in their total investment, their total payable. So I'm tracking that as a liability, or they receive their distributions and then it's just cash coming out of my bank account. So either way, I am tracking investor interest income, either paid or accrued. Do you manage and send 1099s for your clients? If you do manage, is that included in your fees or do you charge extra? I do send 1099s to my bookkeeping clients. I use QuickBooks Online to e-file and e-deliver 1099s. I charge $15 per 1099. So that is not included in my monthly service. That's an add-on extra service in January. About half of my clients choose to have me file their 1099s. So QuickBooks charges $3.99 per 1099, and then I also charge $15. So it costs my client about $20 per 1099 to send them out. All right, everybody, that's it for today. Side note, exciting stuff. Yesterday, I had a meeting. And by the way, if you're not following me on Facebook, Instagram, LinkedIn, definitely recommend follow me on those channels because I post more like daily updates, like real time. I post videos and pictures and posts on my Facebook, my story, my Instagram, my LinkedIn. So follow me there if you aren't already. Yesterday, I had a meeting with an investment banker in Michigan, and he wants to learn more about Zip Capital. He's going to fly to Pennsylvania to meet with me. He's a partner at an investment firm. So I don't know how much money they want to invest into Zip Capital, but the fact that they're willing to fly to Pennsylvania from Michigan, that's pretty cool. That's pretty exciting. So who knows? Maybe it's nothing. Maybe it's not going to happen. Or maybe this is an amazing opportunity, an incredible opportunity to open a couple doors and take on maybe a family office, an investment bank, an investment firm. Who knows? Maybe they'll invest $1 million, but I will keep you updated on that. See if we meet at the end of July. He's going to fly in from Michigan, possibly. We'll see. I don't know. And then on Friday, I have 3 meetings, 3 Zip Capital investor meetings, all local, all in person. So I'm excited to see what happens with that. But definitely momentum is picking up. Momentum is riding. So Steele, Johnny, Sonia, I appreciate all of you watching. I appreciate all of your comments and stay tuned. I will keep you all updated tomorrow, 11 a.m. Eastern Standard Time. Thanks, everybody. Have a great day.